Good morning. It's Tuesday, March 25th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So it's about a week until the retaliatory tariffs are scheduled to roll out, and the markets seem to be hanging on every single Trump soundbite with regards to those tariffs. So yesterday, the markets benefited from suggestions that President Trump and the administration may take a more targeted approach with reciprocal tariffs that the U.S. is set to roll out on April 2nd. So the S&P 500, this is yesterday, added 1.8%. The NASDAQ rose about 2.3%. Now, overnight, we're seeing active buying in the metals and the energy markets and a little bit of pressure here on the equity markets and cryptocurrencies. We may see some profit taking take place on the equity markets or any of these markets that really benefited coming into that date here and closer to the end of the week. Now looking at the strongest markets based on technical strength, and let's also look at the year-to-date performance here. So gold up 13.2%, feeder cattle up 7.86%, copper up 26%, and now live cattle comes into the cards here. So when you look at live cattle over the last 5 years, it's been pushing higher, and you're wondering why those beef prices are so high. You go and you try and buy a steak or a fillet or anything like that at the grocery store, and it seems just ridiculous how expensive it is. Now you look at the performance leaders here. Yesterday, we saw Ether and Bitcoin all going up about 5%. So a real risk on play. And to reaffirm that, the biggest decliner when it comes to a futures contract was the volatility index, down about 7% here yesterday. So let's look at the precious metals overnight. Sorry, I still have a really bad cold here. And some things to watch here today. So gold prices, they edge higher here on Tuesday as persistent uncertainty over the impending reciprocal tariffs here and their impact on the global economy. So if you look at gold futures, we're up here 30.2850, up about $12.80, just off the high of the session, which is 30.2930. The low of the session was 30.10, so we're kind of halting this sell-off that we've been seeing going on. Looking at the support resistance level, so one thing to note, and everybody should know this, on any commodity that you're trading, because it really helps you with the position sizing. The average true range on gold is $40 a day. So if you're trading the 10-ounce contract, you could expect to see about a $400 move in volatility in your account per contract that you're trading. Up, down, straight in one move or the other, it's going to be about $40 a day here unless there's a volatility event risk or some news headline comes out that really gyrates these markets. So your pivot point on the day is going to be at about 30.20. You don't want to see the market break below there because we might start to press that lower level here that we've seen in the overnight session. Your pocket support really comes in around 30.03 down to 29.95. Your resistance point is up at 30.33. Above that's going to be 30.48 to 30.51, and above that's 30.62 to 30.65. Now looking at the silver market here, and we're still looking at May silver, 30.83 last, up about 38 cents. If you look at silver and you draw the line, and I did this in a chart pack, and again, very simple charting, no frills to it whatsoever. This is Jeff Mackey from way back in the day with a purple crayon just drawn on a chart here. Look at the double top in October and the top that we just saw on silver. Draw a line across that, goes right around just north of $35. Go down to some of the support and resistance levels we've seen where we ran into resistance in mid-November. We ran into resistance around January, all around about the 31.70, 31.50 level. Take a 50% retracement. You can see that's where silver stopped here. It's sell-off here after 4 straight days down, and now we're bouncing back up. Is that a higher low? And is there a new trend line to draw from those February lows on up to where we saw that low here yesterday? So we might put that on the chart and send it out here today because it's something interesting to look at here. Now your pivot point on silver is going to be 33.54. One thing to note back on silver as we reflected this on gold is that the average true range on silver is 80 cents a day, and that's really come down from about 90 cents about a week ago, meaning every 1,000 ounces that you own in a contract, most likely your account's going to experience about an $800 move per day up and down as far as volatility. Now the market did bounce off of that technical support, so that was something that I noted. Your resistance point, your first one, we're at it about right now. It's going to be right around 33.84 on up to 33.89, and then above that, we'll see if futures can recapture that $34 area. 34.05 to 34.10 was a key level of support coming down in the market. We'll see if it runs into resistance there. Looking at the ETF flows, and this is again as important, is that the exchange traded funds, they added 753 troy ounces of gold. Was it the fact that gold was closing back in on 3,000 and people were defending that level? I think so. So it brings this year's net purchase up to 5 million ounces, and this was the biggest one-day increase since January 21st of 2020, the third straight day of growth. So your year-to-date holdings for gold up 6%, that's highest year-to-date. Now silver, they cut 1.62 million troy ounces of silver from their holdings in the last trading session. So that's slipping 0.2%, and that's why it's reflected in the gold-silver ratio, sitting at about 89.5 to 1. Now crude oil futures, this is something that we've been really monitoring here. Crude oil prices rose on Tuesday for the 5th straight day on concerns that global supply will tighten after the U.S. announced tariffs on countries that buy Venezuelan crude oil. So that story really got prices moving again higher here, and that's why you got 5 straight days of upward movement on crude oil. Now for position management, and this is for informational purposes only. So OPEC is supposed to come out, and including Russia, they're going to stick to their plans to raise oil output for the second straight month. So if you look at crude oil, there's this downward sloping channel that comes right around that $70 range here. So we're going to want to look at that as a possible price to start tightening up some stops, lifting some additional positions off, and things like that. Now, if crude oil closes in on that $70 level, we'll see if it rejects it the first time around, where a close above it could extend prices higher. However, with 5 straight days of gains here, I think that it's wise, if you were starting to add to positions around those lower levels in that lower price band, that this would be a prudent level to start lifting prices off. Remember, you want to treat your trading account like a bonsai tree, picking and pruning at this thing with those little bitty scissors there. So some key events today, we're going to see consumer confidence, durable goods, but it's really, traders are waiting for the U.S. personal consumption expenditures data that's due out on Friday. It's the Fed's preferred inflation measure, and it could give some hints as far as policy stance going forward. So I anticipate that people will really start to take some positions off probably on Thursday ahead of that number here, and then we might see some gyrations and some volatility around that number once it finally comes out. So sorry to cut it short again. I just feel sick as a dog over here. So you got any questions, reach out to us. You can always send an email over to Blue Line Futures. Be sure to check out our website. Be sure to register for the chart pack using the link in the description below. And then if you want to remember that futures and option trading, it does involve risk loss, and it may not be suitable to all investors. So good luck, good trading.